Hello and welcome to Pro Trader Strategies Market Commentary for Monday, September the 18th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on. A little bit of economic data today. Across the pond, we did get CPI numbers out of Europe. Remember, that's not the main number to look at. We're going to be getting their flash CPI numbers probably next week, and towards the end of this week we're going to be getting their flash PMI numbers, which is the Purchasing Managers Index, CPI being the Consumer Price Index. But the final Consumer Price Index year over year for European region came in at 1.5%, which was in line with expectations, and then the final core CPI came in at 1.2%, expected to be 1.2%. Then here in the United States, we got the National Association of Home Builders Housing Market Index. That's the NAHB. Came in at 64, was expected to be 67. So slightly lower than expected there, and they revised last month's number down just a tick from 68 to 67. Later on this week, we are getting the FOMC meeting starting on Tuesday, tomorrow, and then they'll come out with their final results on Wednesday, probably around 1 o'clock Chicago time, 2 o'clock Eastern. So keep your eyes off of that. I don't think we're going to see a whole lot of market movement out of that. The expectation is that they're going to leave rates unchanged, and I think that we will see that there's not a lot of inflation or any other reasons to start increasing interest rates. Manufacturing numbers, as we've seen, are not really robust by any stretch of the imagination, so I think that they're going to continue to leave rates unchanged. Anyway, on to the overall markets. We got crude oil back down below $50 a barrel. Did go up there and touch that and actually tested the $51 a barrel area today, but since has given back quite a bit, down 60 cents on the day, near the lows of the day actually right now, but back inside of $50 a barrel, back below that area there. One thing to keep in mind here, we did settle above the 200-day moving average, which 3 days in a row basically are above that. So that is actually acting as a nice support area. That 200-day moving average is lining up with the volume node here. So that's going to be an area that the bulls and the bears are going to fight over until we kind of get up and away from that area to the upside. And if it starts pushing down against it, they're going to defend that as bulls. All right. On to gold futures. They're filing out of bed today, down $13, as everybody seems to be talking about Bitcoin and not really talking about gold as a flight to safety in a sense, which is a little bit bizarre to me. I get the whole cryptocurrency thing, but everybody, it is the thing to have these days. So people are kind of rushing into getting into that and putting that in their portfolios rather than gold futures. Now, I'm not a big proponent of putting gold futures into your portfolio just because it is paper. There's more paper out there in gold than there is actually gold that exists. So if anything were to actually really happen, people would not be able to cash in all those certificates to get the gold if they wanted to take possession of it. It's just not a possibility. As a matter of fact, I know many people that have tried to even get gold delivered by trying to take delivery of gold. They just don't let it out. They won't let it go. So it's very difficult to do something like that. All right. So anyway, on to the bonds. Bonds coming off a bit. I think we're going to see it kind of migrate down into this volume area where price has been discovered, price is accepted, and especially heading into an FOMC meeting, I think that that's going to be where it comes down into a realistic area, somewhere right around in these 150, 152-ish area. So we got a couple points to go where it could go down to heading into that meeting. All right, the VIX coming off a bit as we're seeing historical highs in the NASDAQ, the Dow, the E-mini S&Ps today. NASDAQ we'll talk about here in a minute, but overall markets, anytime they start rallying quite hard and into the stratosphere, if you will, we're going to see VIX come off quite dramatically. And as we're seeing here with the Dow up over 77 points here, making a new all-time historical high, and doesn't seem to show any kinks in the armor on the upside. Yes, Friday we saw that doji look like it could have been topping out, but it hasn't quite. Now, I talked about the NASDAQ having a new all-time historical high. Well, that's intraday. So if we go into the chart and we take out what the overnight session's been doing, you can see that we have printed the overnight, or we have printed an intraday historical high. But when we add that back in, to me, that is the target. It's got to get to 60.19 and 3/4. So 60.20 is going to be an area where the intraday market is going to want to trade to and try and print, okay? Because they want to be the big dogs. They always want to have the day session print those highs and or lows. In this case, the highs. All right, we've got the E-mini S&Ps printing a new all-time historical high. This was intraday. If we can go over to the market on the breakdown, you can see the 2506 is an intraday print right off the open, rallied up there and tested that a few times even throughout so far today anyway. So that is a solid number that traders will respect in a sense as a high for the E-mini S&Ps, but up 7 points on the day. Markets, equities just really blasting off. So on to AT&T. Now, AT&T's had high implied volatility ever since this big sell-off. It hasn't really come off too much. We had a couple of spikes here. It's still above an IV percent of 50, so it kind of fits my rules around selling short premium around this. So I went into it and sold some put spreads in my IRA, and I did naked puts in my trading account, my margin account. So in the IRA, I went into the October and sold the 36 puts and then bought the 33 puts. I collected a credit of 32 cents. Now, that 32 cents isn't a third the width of the strikes, right? Because I'm $3 wide. But what I did with this one is try and create a synthetic short put, naked short put strategy in my IRA, and define that risk by doing the 33s, which is basically creating a put spread where I'm buying the defined risk aspect of that at a nickel. So the first put I could buy for a nickel is where I went in at. So collected 32 cents for that. In my margin account, I went in the October and sold the 36 puts and actually got better pricing, sold them at 39 cents. So did a little bit better in my IRA just because I did it better in my margin account because I did the IRA first and got a movement in between there where it gave me a better pricing on the margin account. So got it a little bit better. It makes it look like I paid, like 7 cents or something like that, but it's not really what I paid for that 33 put in the IRA. All right, so bullish strategy in there. Don't think it's going to come down and test these lows, so I'm in pretty good shape for those, I believe. All right, into Boeing. Now, this is a trade that I've had on. Remember, I had on a strangle in there. It was basically the October 255, 215 strangle. So the 255 calls the 250 or 215 puts, and went up there, blasted. It was trading up here very close to testing my 55. So that's when I decided to get mechanical with that, getting tested on my short calls, and rolled up those 215, 215 puts to the 245 puts. And I collected another $2.57 for that strategy. Now it's a little bit tighter strangle, keep in mind. So I'm short the 255, 245 strangle now, 255 calls, 245 puts. And I've collected a nice fat credit for all of that because I collected that $2.57 today, and when I originally put on that strategy, I collected $2.04. So all in all, I've collected just over $4.60, which increases my break even to the upside, which is what I was looking for. I also raised my break even on the bottom side, but at the end of the day, if we come down here and trade down here inside of 240, I'm still going to be pretty safe on those strangles there. So and if it does start coming back quite dramatically, then I might even just roll this all the way down into a straddle. It'd be right around the 245 straddle, all right? So might be able to collect even more credit there. So that's the way I'm going to play this one. That's how you manage your risk on this. I got tested on those. That's when I start rolling. Sometimes I look at it where you're going to roll when your break even gets tested. In this case, was creating an all-time high, just kind of unrelenting to the upside. So I wanted to get a little bit more aggressive with those today and give myself a little bit of a margin in case I needed to go up and create that straddle if it continues to rally up, and if it comes down, I can kind of be mechanical and lower that into a straddle there. So that's kind of my game plan for Boeing, ticker symbol BA. ConocoPhillips. Now this one I have on as a long straddle in my IRA. I don't have anything in my margin account with this trade. We got a nice big rally the last few days. I'm beating the probabilities at this point, so I put in a trade right there at 25% of my max profit. I originally did this trade in the November and bought the 44 straddle in there and paid $3.66. So if I look at it as what's 25% increase in that premium, that'd be right around $2.50 some odd cents. And I have a working order in there, traded upwards of 237 today. So, or sorry, 437 today. That increased value was really close to that, probably about a 18% increase in that premium. So I'm going to be very itchy on the trigger finger there, because it did go up there and look to test those 47 and a half marker there. So as you can see, it came up and the high was 47.23. I was thinking if it got up to 47.50, that was going to be where I really pulled the trigger on that, because that in a sense is only about a 16% probability that the underlying will settle there. So if I can get it up there and beat the probabilities, that's when I'm going to pull the ripcord on this trade. So it's very close. Came off just a little bit, still above that 200-day moving average. So I'm going to be keeping a close eye on ConocoPhillips, especially since we're seeing that crude oil come back off a bit. ConocoPhillips might start suffering if we start seeing crude oil come off. We do have crude oil inventories later on this week as well. So, all right, that's about all I got for you guys. This weekend, or this Friday, we're going to be doing the we're going to be doing the short strangle. We did the long strangle on Friday. We're going to be doing the short strangle this Friday. Now keep in mind, I know that you can go out there and figure out how to do a strangle. It's not a majorly complicated strategy to set up, but when you follow the rules that I talk about, it's going to increase your probabilities of success. I'm going to talk about strike location, environment, and things of those aspects of that type of trading strategy in and around that strangle. So you got to check that out, because otherwise you're just going to be kind of going blind at this, and you can really set yourself up for disaster in a strategy like that, especially if you're not using the right strike location and not implementing this in the correct environment. So check that out at ProTraderStrategies.com. Hope you guys had a great weekend, and if you can't take that, take it easy.